Welcome to the introduction of bricks and mortar pillars of wealth. Real estate, it's tangible, enduring, and a true form of wealth. Unlike stocks that can vanish overnight, real estate is real. You can touch it, see it, and even improve it. It's a cornerstone of wealth building. But why is that? Well, it offers leverage, appreciation, and cash flow. Leverage means using other people's money to make you richer. Banks lend you money for a mortgage, you buy a property, and tenants pay rent, covering your mortgage and putting money in your pocket. That's leverage in action. Appreciation refers to the increase in property value over time. As demand grows and inflation rises, your property becomes more valuable. Cash flow, the lifeblood of real estate, is essentially rental income after expenses, which becomes your profit. This steady stream of income can create financial freedom. Real estate is not a get-rich-quick scheme. It requires patience, knowledge, and a long-term vision. However, the rewards are substantial. Real estate can provide financial security, passive income, and a legacy for future generations. It's about building wealth brick by brick on solid ground. So let's explore the different avenues of real estate investing. Now, let's dive into the allure of rental properties. Rental properties are the bread and butter of real estate investing. You buy a property, find tenants, and collect rent. Simple, right? Well, not quite. It requires careful planning, due diligence, and a knack for managing people. First, you need to find the right property. Location is key. Look for areas with high demand, good schools, and low crime rates. Consider the property type: single-family homes, apartments, or even commercial spaces. Each has its own advantages and challenges. Next, crunch the numbers. Calculate the potential rental income. Factor in expenses like mortgage payments, property taxes, insurance, and maintenance. Ensure the property generates positive cash flow. Don't forget tenant screening. Finding reliable tenants is crucial for a smooth operation. Managing a rental property can be hands-on. You'll handle repairs, tenant issues, and rent collection. Alternatively, you can hire a property manager to handle the day-to-day operations. Rental properties offer steady income and long-term appreciation. They are a solid foundation for building wealth through real estate. Moving on to REITs, real estate without the headaches. Not keen on being a landlord? REITs, or real estate investment trusts, offer a hands-off approach to real estate investing. REITs are companies that own and operate income-producing real estate. They're like mutual funds for real estate. REITs invest in various property types: malls, office buildings, apartments, even data centers. They generate income from rents and property sales. By law, REITs must distribute at least 90% of their taxable income to shareholders as dividends. This makes REITs an attractive option for passive income seekers. You invest in a REIT, and they handle the property management, tenant issues, and everything else. You simply collect dividends. REITs are traded on stock exchanges, making them liquid and easy to buy and sell. They offer diversification within the real estate market. Instead of owning one property, you own a piece of many properties across different sectors. REITs provide an accessible and convenient way to participate in the real estate market without the hassles of direct ownership. Lastly, let's discuss flipping houses' profits in renovation. Flipping houses is the art of buying undervalued properties, renovating them, and selling them for a profit. It's a faster-paced, higher-risk, higher-reward approach to real estate investing. Flipping requires a keen eye for potential, renovation skills, and market timing. First, you need to find a property with good bones. Look for structurally sound houses in desirable locations that need cosmetic improvements. Avoid major structural issues or properties in declining neighborhoods. Next, develop a detailed renovation plan. Estimate costs accurately and include a contingency buffer for unexpected expenses. Time is money in flipping. Complete renovations quickly to minimize holding costs like mortgage payments and utilities. Finally, stage and market the property effectively. Highlight its best features and appeal to the target buyer. Flipping houses can be profitable, but it's not for the faint of heart. It demands hard work, market knowledge, and a tolerance for risk. But for those who thrive on action, it can be a lucrative path to wealth building. Section 5. Budgeting, the cornerstone of real estate success. Real estate investing, like any financial venture, requires a solid budget. Before you even consider buying a property, you need to know your financial standing. Start by tracking your income and expenses meticulously. Identify areas where you can cut back and save more. Next, determine your investment goals. What type of property are you looking for? How much can you afford to invest? What's your desired return on investment? Having clear goals will guide your budgeting decisions. Get pre-approved for a mortgage. This will give you a realistic idea of how much you can borrow and what interest rate you qualify for. Factor in closing costs, property taxes, insurance, and potential maintenance expenses. Don't overextend yourself financially. Leave room for unexpected expenses. A well-structured budget is your financial roadmap to real estate success. It allows you to make informed decisions, avoid costly mistakes, and achieve your investment goals with confidence. Section 6. Market research. Knowing where to plant your seeds. Real estate is all about location, location, location. Before you invest in any property, you need to understand the market dynamics of the area. Start by researching local demographics, population growth, age distribution, income levels. These factors influence housing demand. Analyze property values, rental rates, and vacancy rates in the area. Look for trends. Are prices rising or falling? Is there high demand for rentals? This data will help you assess the investment potential. Study the local economy. Are there major employers in the area? Are new businesses moving in? A strong local economy supports a healthy real estate market. Don't underestimate the power of physically exploring the neighborhood. Walk the streets, talk to residents, get a feel for the community. Thorough market research is your compass in the real estate world. It helps you identify promising opportunities, avoid risky ventures, and make informed investment decisions that align with your goals. Section 7. Property management. Tenants, toilets, and triumphs. Property management is the nuts and bolts of owning rental properties. It's about handling tenants, maintaining the property, and ensuring smooth operations. If you're not prepared for this aspect, it can quickly turn into a nightmare. First, establish clear communication with your tenants. Outline expectations regarding rent payments, property upkeep, and communication protocols. Respond promptly to tenant requests and address any issues efficiently. Regular property inspections are crucial. Identify potential problems early on and schedule necessary repairs or maintenance. This prevents small issues from snowballing into major expenses. Keep meticulous records of all income and expenses. This is essential for tax purposes and for tracking your investment's performance. Property management can be time-consuming and demanding. If you're not up for the task, consider hiring a professional property manager. They handle tenant screening, rent collection, maintenance, and all the headaches that come with being a landlord. Section 8. Conclusion. Building a legacy, brick by brick. Real estate investing is a journey, not a sprint. It requires patience, knowledge, and a long-term vision. Whether you choose rental properties, REITs, or flipping houses, the principles remain the same: research, planning, and careful execution. Remember, real estate is tangible. It's a physical asset that you can see, touch, and improve. It's a hedge against inflation, a source of passive income, and a legacy you can pass on to future generations. The path to wealth building through real estate is paved with bricks and mortar. Each decision, each investment, each property is a building block in your financial foundation. So start small, learn as you go, and build your empire brick by brick on the solid ground of real estate.